A funny thing happened on the way to 3% on the 10-year and 91 on the US dollar. What's up, everybody? Welcome aboard to Bubba's Daily Update. And as we have said for months here, is 3% in the 10-year was a huge level, and 91 on the dollar was a giant level. And today both were violated, although we went back and closed below both. We saw the markets that were up about 150 this morning, down about 600 midday, only to close down about 420 in the Dow and about 35 points in the S&P. And of course, you can expect more of this now. These were what we talked about, the potential Black Swan events, which ties back into the Federal Reserve and their continuing financial engineering and everything else that they're trying to get done here. It doesn't work. And of course, rates are going to rise faster. And even with the little bit of a pullback, we're still closed just a shade under 3% and just a little bit under 91 on the dollar. And those are going to be the two things that are going to cause the biggest amount of heartburn. What you're hearing right now is it's the tariffs and it's the high price of steel and everything else, and that's the big deal. And of course, you saw Caterpillar have a major reversal, and you had Boeing have a major reversal. Maybe, just maybe, those stocks were overpriced to begin with, right? That's more would be the story, is that the markets themselves have been lofty in a bubble and a balloon anyways. So a reason to sell off is no big deal. And I think that's what you should expect to see. And that's why I think that we're going to go ahead and test those lows we made in February. And I think you're going to see the continuation of sell the rally. We talked about a possible false breakout of the downtrend. I think that's what you saw here. Now, again, you're not going to get aggressive after we're just down 400 points. You have to watch and let the markets come back to resistance if you're going to want to go ahead and sell them. But you saw everything got clobbered and was down much more. It did make a little bit of recovery. Volume was big. The VIX was up big. So again, these are all things to be worried about. Treasury bonds were down a little bit, which obviously pushed rates higher. Watch the yield curve. 2 years are 2.5 and 10 years are 3. They're getting too close. They're getting ready to invert, which is another bad sign for the overall general marketplace. So keep an eye on those things. And of course, oil had a dramatic reversal once again. They tried to push it up. It was lower this morning, rallied up big, and then collapsed and was down about $1. Gold, not really a big enough rally for the kind of market that we saw. It was up about $10, but I would have expected more from gold if there was fear on that sector. But of course, we continue to see Bitcoin continue to rally higher. And of course, as we said here, when it was about $6,200, we said that we're buyers of cryptocurrencies. They're going higher, and I think that's what you're starting to see. You're seeing some movement going higher here. I think you look at the grain markets, grain's reversed on all this news, which has been another part of our thesis. Now, if the tariffs and trade wars were such a big deal, why are grains rallying? Right, they have the same effect. In fact, there's more effect on those than anything else. So they rallied. Wheat came from down about 5 cents to up 11. Corn rallied, and soybeans were down big and then closed up on the day. Meats, as we suspected, we didn't like the rally, and of course they did sell off late in the day. In cattle, closing somewhere near flat to down a little bit. There's probably one more push down, I would think, tomorrow, and then I think we'd want to step in and be buyers. Hogs were a little bit soft, but I think right around here, 75 is a good place to step in. The big picture is simple. You've got to watch the levels. You've got to watch the market footprints that they're leaving. If you look at just a couple, you've got gold, which 1330 was a key level, closed below it yesterday, above it today. So you got to watch that 1330 level as it starts to churn here. I think there's a better chance that it gets down to 1300 before it continues higher, but we'll see how that plays out. The bond markets look like they're going to continue to head lower, and of course that would make rates go higher. But what we want to see is you're seeing these companies being punished on very solid and very good earnings. You had Google had great earnings yesterday, down about $60 today. Amazon down about $50 today. So you're starting to see that the earnings, as we've said all along, are already priced into the market. You cannot create more if it's not there. So it's going to be tough for these companies to beat earnings that are not already priced in. So yes, if we're at 16, 17, 18 times in the earnings market, then we should see a sell-off because that's what's already priced into the market. Remember, markets assume and price in well ahead of time. Was today's market maybe a little overdone? Maybe. You might see a little bit of a rally, but I will say this. If we gap up tomorrow, I'd be a seller into that gap. If we flush down early, I'd look for a spot to be a buyer. That's kind of the way you look to trade these markets on a very short term. That's the way I see it. This is Bubba's Daily Update. And of course, remember our high school investing program. If you'd like to help us out, patreon.com/Bubba Trading. And of course, don't forget to catch the Bubba Show every day from 4 to 5 Eastern at libertytalk.fm. Have a great day, everybody. Thanks so much for being here. Always a pleasure to serve. We'll see you back here tomorrow. Same time, same station on Bubba's Daily Update. Take care, everybody.